All right, well, let's talk more now about these markets and the plan specifically. I know there are a lot of questions out there. What exactly is the plan? What will they buy? There's a lot of complex things that are related to mortgages. But at the end of the day, the issue is going to be how it impacts you and what it may do to the economy and the mortgage market, right? Well, David Castillo is Senior Managing Director at Further Lane Securities. He has been trading this kind of stuff for more than 20 years in and around mortgage desks. Understand it's priced well or better than anybody in the United States. David, welcome to the program.
Thank you. Thanks a lot,
Explain in plain English for our viewers what exactly the pricing aspect of this. They say, well, what's the $700 billion going to go for and how much are they going to pay? Lay it out.
Basically, what you're looking at, Brian, is that the underlying mortgages or home equity loans lines of credit that underlie these securities are being priced at significant discounts in the marketplace because the expectation is that the investor at the end of the day will not reap full value, that is par value for the securities, or in the case of monoline wrapped, that is wrapped by MBA.
What is that monoline wrap? See, it's easy to get into the jargon, but what does it mean? People say, well, where did my mortgage go?
Well, your mortgage went into your bank who originated, that then sold it to another conduit, that then put it into a security, that then repackaged this and sold it out. So you wouldn't get your loan but for the fact that we had this sort of mechanism in place. So investors who have been investing in these sorts of securities are doubting whether or not they get, full 100 cents on the dollar back. So the market is pricing these things at ridiculous discounts. It's been terrific opportunity.
One thing that people on the street, investors, have a concern they've voiced is you start adding elements to this bill, an element about CEO pay and compensation, and that these financial firms will not participate in this and you won't get the real boost and bang that you need from a package of this size. Do you buy that?
I don't know whether or not I buy it or not. I think that's hyperbole. I think what you've got to do is what's being made is a statement that there's some sort of move going on. Hank Paulson is a brilliant guy. Okay, Ben Bernanke's a brilliant guy. I'm sure Warren Buffett got a call from somebody and said, for the good of the country, make an investment in one of these guys. All right? And I think what's going on now is we're trying to put something in front of these people in Congress and Senate that will at least put some sort of confidence back into the system. And I really don't think that the people in Congress and Senate truly understand the nature of the underlying securities that they're supposedly legislating about.
And at the end of the day, what we've got is a drying up of credit. Okay, people want to buy a home, start a business, buy a car, and as the president even said last night, that's drying up.
That's correct.
If this package is implemented in some form like they're discussing, and we think it will be, based on the conversations we're getting out of Washington, will it open up credit?
Well, it'll open up credit. It will take time. Just like any other crisis, I can take you back to the S&L crisis in the late 80s. I can take you back to the sharp interest rate movements in the mid-90s, long-term capital in the late 90s, the early 2000s. They've all been very, very difficult, and they take time to work out. So the implementation of this package won't immediately create credit to mom and pop Main Street. What it will do, though, is allow banks to get confident to lend to each other again, which will then allow stuff to happen again. I'm not in completely support of a blank check sort of deal. I don't know whether or not I believe that this is enough because, over the last couple of years, there's been trillions of these securities issued. To leave a backstop bid out there of $700 billion, yeah, you know what? That's a large amount.
This is what you did for a living, is worked in these types of securities. Yeah. And people are already pointing the finger and blaming the folks on Wall Street for creating these, and the blame is going to be pointed directly at you and your brethren for a very long time. What do you say to that?
I'd say that I'd be happy to take that sort of criticism if it was based on any fact. Unfortunately, it's based more in what people want to believe. And that's the fact that there's Wall Street, so to speak, out there creating these instruments for their own benefit. The only reason why the instruments are created is because there's a demand for credit. All right? My mom wants to buy a car. She's going to go and get financing from the car dealer. The car dealer is then going to sell that loan to somebody else. That loan then goes to somewhere else. Main Street doesn't get credit availability without the availability of these large credit facilities and these instruments that are created. That's what the United States is about. I mean, let's think about it. Capitalism is predicated on credit.
You're right. It's hard to say at the end of the day behind all this stuff was just a buyer of a home and somebody, and willing to lend them the money. And somebody agreed to take a loan.
Exactly.
And then that trickled up. But it starts at the housing level on the street.
Everybody betting in one way, shape, or form that home prices would keep going up forever.
There was a bet on the home price appreciation, but also, too, bear in mind that it was the accessibility of the credit, as well as the confidence that we would continue on this course over time. It's my supposition that we put more power into the hands of the individual to make decisions. I think some of the radical changes that we could think about, overhauling our tax code. All right, do something radical.
Cut taxes like Kennedy did in 1963.
When you cut taxes, you raise revenues. It's been proven before. Make down payments for homes tax deductible, up to 20%. Cut the cap gains rate, free up capital to flow into these markets. What we need is Americans buying homes and Americans buying mortgage-backed securities.
Well, taxes may go up and capital gains may go up. We'll see what happens.
That could be painful.
David Castillo, Further Lane Securities.
Thank you.
All right, have a safe trip back to San Fran. Thanks.
Thank you.
Great to see you, David. Still to come this hour, these are historic times. What should you do with your money? That's what we'll ask Whitney George. He manages over $10 billion in small cap money. No matter what, people still need to eat and make their food taste good. That's where McCormick comes in. The company reporting profits this morning. We have the CEO here, a first on Fox Business, plus all things digital with Walt Mossberg today. He shows us a new type of tech support. Everybody needs that. You're watching Fox Business, the only business network in true HD.
Friday, McCain, Obama, the first debate of the election, tackling questions about Iraq, Iran, and critical foreign policy issues. Neil Cavuto hosts the first presidential debate, followed by reaction and analysis on Fox Business Network. The captioning for this program is brought to you by
Urgent Medical Alert. If you developed a ruptured tendon or tendonitis after taking the antibiotic Levaquin or Cipro, call 1-800-LAW-FIRM.
Introducing Zurich Help Point. It's a new way of looking at business insurance. And whether you need a rapid response to a crisis or direct access to more locally based risk engineers than anyone else, it's here in more than 170 countries, so you'll have the confidence to take your business where you want it to go. It's here to help your world. Zurich Help Point, because change happens.
Life for Chris, 47, is his wife Ellen, their daughter Julie, and their son James. Chris is a contractor. Ellen works for a home developer. They had some life insurance, but knew it couldn't cover the family's expenses if something happened to either of them. Then within a month, 2 friends died. No life insurance. Chris got the message. A friend said, call Select Quote. They comparison shop the highly rated term life insurance companies they represent and save you plenty. Chris called and was delighted to learn he could get a $350,000 policy for under $27 a month. Ellen could get a $250,000